Hi folks, Basil Chapman, and this is the Tiger Technicians Hour. This is in fact the Thursday edition, Thursday the 22nd of May, and my pleasure to be here Monday through Friday on Market Day. Be here Monday. Oh, let me do this before I forget. If you go to the front page of TFNN, this is not only was it a surprise to me, a great surprise to me. It is just, I can't believe what you've got. Go to the front page of TFNN and it says there, 6-pack webinar bundle this weekend only. Why? It's a long weekend. Why? I have no idea. But what they've done at TFNN is they've bundled up 6 webinars that normally cost about $149 each. You can get all 6 of them. Let me just read this carefully because you get access to these 6 webinar archives, a total of 11 hours of education for 90 days. I can't believe I'm reading them. Rub my eyes. Plus, you'll get the course handout for each webinar, which is yours to keep, but you must act now. This offer is only good through Memorial Day, Monday, May the 26th. These courses sell for $149 a piece, so you're getting an $894 value. Just sit down because you're not going to believe this. For $149 when you purchase it now, 6-pack webinar bundle gets 6 webinars for the price of one Memorial Day weekend only, and you've got until, I believe it's the until the 26th to get it. Hey, let me just see. Am I reading this correctly? 6-pack webinar bundle. Tom O'Brien. You've got Foundations of Option Trading, Strategies of Options Trading. If you know Tom with options, this is an unbelievable course. You got my Moving Average 2-hour webinar, the Stochastic and MACD. I love those two webinars. Stochastic and MACD webinar. You've got Mike Comey did 2 fabulous renditions of the analysis of candlestick. How he looks at candlesticks, how you can chart them, and that's there, 2 hours and 1.5 hours, candlestick charting, advanced candlestick charting. I don't believe it. Anyway, as KJS says in the day, wow. All right, so I'm going to have to repeat this a few times today because I have to tell you, rub my eyes to check it out. All right, let's go to the market. Dow's up 18 at 16,555. S&P's up 471 at 1892. You've got the comp index. It's now up 19 at 4151. You've got the gold contract up 717. It was up 12 before, and now it's up at 1295.90. You got silver up 17 cents at 19.51. You've got crude oil. Well, high-grade copper is back at 315. That's good. Crude oil is now at 103.99. It's about bonds are down 530 seconds, 136 and 1730 seconds. We'll look at all these in a moment. Dollar's up 13 cents at 80.20. A euro down fractionally. So, yesterday, in the morning, what I discussed was, on Tuesday, the Chapman Wave Trend Gauge, is a proprietary indicator, gave a reading that suggested that within 1 to 2 days, there are 2 readings that I get. One is on the high, and it suggested that within 1 to 2 sessions, there could be a rally in the futures, which means that sometimes it happens pre-market. But whatever it is, it's a rally that could come anywhere. It could come down. It could come from an area where the market suddenly tanks 15 points and it looks horrible. But what it's saying is be really careful because this particular indicator has a way in 90% accuracy rate. This particular one these days, the other one has I called it technically that it failed the other day, but it was absolutely perfect because it gave an indication that said the Dow should minus. It missed going minus about 5 points, but it was a day that it couldn't rally and it kept coming down, it just did not go minus. So it fulfilled everything that it's supposed to do. This particular indicator, also based on the Chapman Wave Trend Gauge, says that 1 to 2 sessions, you could get a rally of 7 to 9 points on the E-minis, and that should translate into a cash rally. And of course, yesterday, it's exactly what we got. But that wasn't really the issue. The issue why I said to my subscribers, to my opening call, one of the reasons why we've had a short position in the Dow, and we've tightened the stop, so we will take a profit if that stop is hit. But at the same time, we went long, and I mentioned on air that the Qs via the 300% on the Q ETN, the ETF. And look at this. One of the things I wanted to show you here is the pattern repetition. And I looked at this high of the 4th of April at 16,631 in the Dow, and it came down sharply to a doji candle, and I said match. See, I typed it in for my subscribers. That session, I put a match with that session there. That's when I mentioned it. And what I'd said is, there's a chance that we could have a bit of a rally and then come down maybe an A to B equals C to D. That's classic lightning bolt pattern. And like the 11th of April, that 16,050 started that massive rally going all the way to all-time highs in the Dow, there's a chance that we could be looking at the same sort of thing, especially with my Chapman wave trend gauge flashing, that there should be a rally within 1 to 2 sessions. So now what we're looking at is the Dow has had a nice move. It's nothing like the candle. I didn't expect actually to have the candle today that occurred on the 11th, on the 16th of April, but I did expect something today that would say moderate new highs. Chances are that we won't go all that much higher, and that we'll have some doji type candle today. And then the real impact will be tomorrow and Tuesday. What happens then? The Dow pulls back very sharply under the 16,000. At this point, I'd say 16,430 area. Closes under that. That'll say, uh-oh, it could be a problem here. We're back in a trading range. Watch out for the low of 16,341. And, in fact, there's a rally after whatever the close is today. Tomorrow, or certainly by Tuesday, that'll say, hey, there's now a real good chance that the arch that goes to an M pattern, that goes to an arch, that goes back to, to the cup pattern, and now is possibly making another cup pattern. That's going to be something that we've got to follow very closely. And the MACD has not gone back to positive. So there's a little bit of, it's a little suspect move at this point in the Dow, and the stochastic still struggling at 32%. So I'm suspecting that if anything, there'll just be like a rogue wave to the upside next week if there is a new all-time high, and then we've got to be real careful. That'll fool the bulls and the bears, and when everyone's just not looking and totally confused, that's where we could have, in fact, some kind of a pullback. So I'm looking at the June 300-minute E-mini NASDAQ future. It's got an alternate count of F/B, bumping up into a rising wedge resistance area, with the stochastics at 90%, the MACD is still good. So it's going to be really important whether or not it breaks the 36.52-55 area in the next 2 days, or whether it pulls back and goes under 36.41 for a consolidation. And I have almost the same thing in the E-mini. Leg E up, there's a trend line right there. There's a Chapman wave cup and ladle breakout that says you can usually go to at least a D or an E, and now we're in leg E. So I suspect that we're in for a little bit of some kind of a digestive phase coming up. And that's what I want to look at there. A couple of questions in the den. One is TJX. Wow, TJX, you know. TJX and all its cohorts, they have home goods. Wife loves home goods. I don't know if we ever get anything there, but she just loves perusing the place. Now, I used to have TJX all notated, so it's going to take me a moment. All I can say is I will do that during the first break coming up. But the candle that's forming now on a weekly basis in the weekly chart, that Roman candle says if we close and TJX on 42 cents at 56.18, if we close anywhere here Next week, if there's a pullback and you go under 55, the low this week so far, 53.87. If you go past the middle of the week of this week, below 55, I wouldn't even say close under it, but if you get there, be real careful because you very easily test the low, and it's just been a rocket ship to the upside. Yep, it also has Marshalls, a whole bunch of stores. They have some of the best stores that I would say that women like to go to, because I mostly see women there when I go there with my wife. But I'm not sure. That's just what I see. So anyway, they have a really good selection, I guess. So TJX is the old Zare. Okay. Now what we're looking at is another question. Ross Stores, ROS. I think they're all going to be impacted. It's one of the reasons why I got a little cautious here, because I'm looking at the retail sector, and it's a real mixed market. Oh man, I had Ross Stores all the time. So let's see. But I think I might have resolved some part of that problem. So let's go to Ross Store. Oh, I don't know if I can do it in the short. I'll do them both in the break. In the meantime, what I would say, Ross Stores is having a bounce. This is very important in the weekly, because if Ross Stores trading at 68.48 ROST, up 40 cents, is able to break above 70.10 next week, that'll say you got a cup formation, and that tackle that ugly bar of the 11th of week of the 11th of April, and go to 68.71. I would say I'm not that happy with the monthly chart. I think there could be an arch formation. So I'd be say a break below 67.50 to 67, and that says, we need to go all the way back down to the Roman candle of the week of the 7th of February at 65.15. So if you were long, I'd say just make it a real tight stop. I'm actually looking towards shorting some of these stocks on a decent bounce. The monthly chart is, at this particular point, as a 9-period moving average of 69.96 is really strong resistance. So then another question was DDD 123. DDD trading at 53.50, made a peak E-top in the monthly chart, way up at the 97.28 level, 97.28, 97.28, typed it in. And now what we're looking at is it's plunged down to the most recent low of 41, or was it? 43.35, having a bit of a bounce. This bounce could actually last a little bit. I want to talk about this in the rotational aspect of why I think the NASDAQ has a little more to go, and why some of the momentum stocks like DDT is included in that sector. I'll be back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Chapman, this is the Tiger Technicians Hour, and let me show you something here. A, B, C, D. All right, so I did TJ Maxx and Ross Stores and their daily, monthly, weekly time frames. Ross Stores, no, let's go to TJ Maxx. It did make a high, a peak D high in the Chapman Wave methodology, right there at 64.38. 64.38. Let me type that in. So I've got it, 64.38, and that was back. Was it December of 2013? That was January of 2014, and now it's pulling back, making lower highs and lower lows. And the pattern that we're looking at here is the arch. The H formation right there in the monthly. You can see it a little bit better here in the weekly. Look at that. Broke under the left side, the left side support level right there. Yes. So this is, to me, saying that got to be a little careful here. A lot of the major, the big winners in all the areas over the last 2-3 months are starting to have very sharp pullbacks. And those pullbacks are very, they're very important. Why? Because at this particular stage of the game, we're looking at, how can I put it? We're looking at a situation where the rotation is finding other stocks and areas to hold the market up. Otherwise, we couldn't get it down up 20 points after a massive 115-point move yesterday, and the S&P up 6.56, stronger today than the Dow. That's important. So that's, to me, that speaks of a well-organized, well-orchestrated, a well-digested consolidation that has unfolded, is unfolding, and is still to come in some of the areas that are becoming overbought. So I still expect the consolidation to continue, and even if we make new highs, that'll just say that the weekly charts have a chance in some of the few indices that did not make. No way that I can count it any other than this is a peak C if there's no new high, like in the New York Stock Exchange, above 10,725.09 this week. And so far, 10,656 up 36 is the story And it looked to me like there is a chance that we could at least touch those. Now, a quick question I should get to. Basil, help if possible. What does the Chapman wave tell you about feeder cattle futures, FC or GF? Please submit continuous contract analysis. I'm going to do this just for 1 second. I want to show you something. I know you asked me to admit it. I know that you question in the day, Zital, doesn't use the continuous contract, but I have to tell you that it so much information historically. That's the reason to do it. Why? I want to know that it just squeaked above the last major high of 2012 back in March of 2012 at that peak F top. I want to know that it's only in leg B. And if it's at a new all-time high, having gone to not an all-time low, but having gone to a low lower than the start of 2008's buy signal, I want to know that because it says that this candle is an engulfing candle, basically, of all the previous price points going back a few years. To me, that's important. That's number one. Number two is when I'm looking at the weekly chart, I want to know if there's an alternate count. And at this point, it's G/C. Everything looks like it's C, and that it should. Yeah. So those prices never, ever traded there. Never. You're 100% correct. But what it does do, it might not have traded there, but the highs are the highs and the lows are the lows, and they always coincide. Or at least I should say the majority of time they do. And it has given me very nice indications. This, I think, is in fact an E right there. There should not be a D right there's an E. And so that's the reason why I do it. Now I'll go to what you would like to look at, which is the contract itself. Now, I don't know, feeder cattle. I'm going to, is it the M? Nope. Feeder cattle FC. And let me grab a K. K is too soon. That's May. I think that's too soon, so I'm going to say, I don't know what a Q. Oh, Q it is. And here we are. So I'm going to put this up for the moment, and we've got a caller online. So let me go to a caller. We've got Mark in Denver. Hi, Mark. How are you?
Good, Basil. How are you?
I'm in the middle of feeder cattle, and now we're going to move on to?
Well, maybe the cattle want to eat some apple.
Okay, I thought there'd be a connection there. Yeah, so folks, we're looking at Apple. Apple's trading down 63 cents at 605.68. Now, I've shown this to subscribers the other day as a matter of interest, that there was a potential Chapman wave stalk leg formation, body just formed, and then it broke out above 604.41. That would start the neck, and at that point, you might get some kind of resistance. That's exactly what's happened. So we're going to discuss it in great detail, and that'll give me a chance to do the feeder cattle August chart. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we're on with Mark Denver. We're looking at Apple. And Apple trading right now in the 120-minute chart has made a cup formation, double top formation with a little doji at D, and now it's making the right side of the cup right there. And it's gone to an E with a wide-legged doji. And that says that there's a trading range here that makes it very clear that even if it pops up above 607.87, it's probably going to test the 606 to 605 level. And even if it dips down underneath 604.10, it'll probably have to at least one more time touch the 605 area, and then it could go down. I says, from what I'm looking at based on the MACD and the stochastic, which is very strong, but just beginning to flatten out, that Apple could have a little bit of a pullback here, but at worst, I see 603, 602, and at best, until it breaks 609, at best, 607.86 is high today. I think that it can go to 608.90, maybe 609.50, but then it pulls back. I don't think it breaks to 611 until it digests a little bit more. Now, that's on the 120-minute chart. When I'm looking at Apple on the weekly basis, a lot of what I'm looking at says, hey, keep looking at that 120-minute chart, because the confirmation says that if it goes halfway into that, it could very well test the bottom of the confirmation. If it takes out the bottom, there could be a 1-to-1 to the downside. Well, with Apple, if this is the neck, and right now we're looking at just a fractionally new recovery high in the daily, it is holding very well, but it isn't leading right now, then it should pull back, and it should pull back underneath 604.41. Well, that is so tight, it doesn't have to go very far to do that, just 2 points, and it's in there. So I'm looking at Apple, and I think with a leg D in the weekly and a leg D in the monthly and just having gone to an E in the daily, I suspect it's going to just have a bit of a high-level consolidation. I'm also looking at Apple a little differently now. When I was looking at Apple before, I looked at it purely on a basis of their product lineup, the fact that whatever Apple store I go to, wherever it is, in whichever city, it isn't anything close to the way it used to be with people lined up. So now it's just it's a different kind of a company. I think it's a value company more than anything else. So I think that it seems to be, from what I'm looking at, based on the patterns, is that there are buyers in Apple, and they are supporting Apple. And that every time Apple pulls back, unless it breaks under 580, 570, what is that? Unless it breaks under between 580, if it breaks under 580, closes under 580, then all of a sudden there's a chance that it could start heading towards the gap below 560. What are you doing with Apple?
I was just kind of using it as a proxy for the Qs. I wasn't doing anything. I was just wondering if, because Apple looked like it was popping out to me, if that was going to on the Qs.
I know what you're talking about in terms of as a proxy. I would say that I would put it into the category of one of the stocks in the NASDAQ or the NDX 100 or the Qs, one of the stocks that, in fact, is helping. But the leader, let me just see what Netflix is doing here. I think there are a couple of leaders. Look, Netflix is up again, up 80 cents at 391. It was at 299 back on the 28th of April, a month ago. This is spectacular action, percentage basis. So there are other leaders. I think they're all getting a little bit tired on a very short-term basis. I'm anticipating that, let me just put Google, G-O-G. Yeah, same thing. Google's very strong. Nice move up. I think they have a little room to go. And I think Apple is included, but not, how can I have to phrase this correctly. Yes, I don't think Apple is the leader. It's independent of the other stocks. It was doing things differently when the others were tanking. I think it's already had a pretty big consolidation, pulling back. Now I don't think this is just short covering. I think there are new buyers or added buyers in the big funds to Apple at this particular point. So I'd put it like number 5 or 6 that list, but definitely you've got your Google and you've got Netflix. Is that? Let me just see Amazon, AMZN. Yeah, and Amazon up $2.92 at 307.99. Yep, I can see Apple going to Amazon going to the 314.88 9-period exponential moving average maybe next week. So that's what I'm looking at. They're making either large H patterns or cup patterns that are going to go back and fill a gap or go into resistance fairly soon. That's kind of, I'm treating this, even though we're long the Qs, I'm treating this first as a counter trend rally. And if it gets legs, that's great. Just raise the stop or maybe even add some positions. But at this particular point, I think the downside between now and next week, Tuesday, Wednesday, I think it's fairly limited in the Qs, maybe more limited on the downside than, say, the S&P on a short-term basis. So I hope that helps you in the analysis that I'm looking at.
Yeah, it does. Thank you.
Thank you very much for calling, and have a great weekend. So it was Mark in Denver. Now, there are a couple of things. Let me just get back now. I just wanted to do a little bit more on that, on the feeder cattle. Why? Because, hey, this is really important. If feeder cattle keeps going up like this, those restaurants are going to be in trouble. Prices will filter in. There's no question about it. So the weekly, I have an alternate count, but at this particular point, I'm calling it C. I have no reason why I shouldn't call it C. Price is well above the 9-period moving average. MACD, very strong. The MACD differential, I call it the fast moving average. Technically, that's not correct. It really is a 9-period differential. That is very strong. The stochastic at 91%, very strong. On balance volume is hinting that we're getting very close to some kind of topping action in the weekly chart, but that's just hinting, and that can actually take 2 to 3 weeks to unfold. But the daily is saying fabulous action. Right now, I'm a little bit tired, and I'm probably going to go from the 195.47 level down 1.05. This is FCQ14. That's August feeder cattle. And my suspicion is at peak F rather than a peak C. That's what I'm thinking right now. The pullback should be contained, and at worst case, you can see a 5-point pullback over a period of a week and a half or so, going to the 190 area, maybe 189. So that's 5% of 20. Yeah, that's a very small percentage move, and we can start looking at a potential leg D. If there's no new high next week, then it'll be the following week. So that's kind of what I'm looking at. Now, what is the count in the diamonds and the, okay, so here we are weekly, the DIA. The DIA, I've got this, I really could call it alternate count G/C, and I just, for purely technical reasons, I do this so that people looking at my work understand my thinking. More normally, I'd be looking at this and I'm saying, wow, with this move up, it's really very likely that it's C and that the Dow is going to go, the Dow Diamonds is the trading vehicle for the Dow, that the Dow Diamonds will go to 167.30 to start leg D, and that should happen next week. That whole thing will be negated, and I'll have to use the alternate counter G if, in fact, by Thursday of next week, the diamonds are, in fact, underneath the low of 3 days ago. Let me get rid of that. I made it up. Get rid of that because I didn't have the data there. If the Dow diamonds are under 163. Just make it simple. A break under 163, and this particular move to digest even longer. So that's what I'm looking at in terms of the Dow diamonds. Week chart, the Dow itself is in exactly the same situation. And you can see that the MACD is just trying to positive. It's improved the weekly chart. Where the daily chart takes a really sharp hit, as it did 16,035 to 16,341. What happens is it impacts the weekly chart, so the weekly chart takes a little while to accommodate, and then first it accommodates and then it has to rectify. But we do get that leg, body, neck, head, and beak in the Chapman wave stalk leg formation of the daily. I said I have to go with a pattern, even though it's unusual to get it so soon, making one just recently and then popping up to a peak D and pulling back. That's the way it is, and it helped us a lot, because it says if you get into the body, but you hold the low bar without breaking that body, that means the beak should be finished. That's the down move after peak. The leg, oval body, neck, and head. Now the beak comes down, and once the beak is complete, there can be a powerful rally. But then it really is the baton that's being passed on. Something complete. You have to use a completely different technique once you get the bounce off low bar that does seem to form the beak. So we're fresh now. Where is it going? Oh, I need to show my subscribers this chart again. I showed it to them recently. It is unbelievable. I did this like 2 weeks ago, maybe. I'm not sure when I did this. And then I forgot about it. And I looked at it and I thought, I must be out of my mind. What am I thinking? But I gave the scenarios. I gave a very strong worded analysis in that there was no obfuscation. I said, if this is the case and that we are going to go to a D in the weekly chart, this is what we'd expect. And that's the pattern I drew. I drew this before on that bar right there. So I drew it for I believe it was for the opening call, the 16th of May edition. And I drew this in and showed a sharp down move and then a rally to just a modest high. 167.29 was the all-time high in the diamonds. I'm thinking in the 167s, not much more than that, maybe just a little bit, but not much more. And then we start to get a pullback, and that pullback takes you all the way back down by sometime in June. This has got the 9th of June. That's really kind of, I don't know, that kind of timing. Would be a left side, right side price time match. And if that's the case, they would be back at 160. That would be a pretty sharp pullback from the 168. So 8 points from 68. So that's a 5% correction. So that's what I'm looking at as a possibility. I don't know, but I found the chart last night, and I hadn't got the updated data from last night. So I thought this was very, very interesting. It's just, we'll see if we follow it. Now, a couple of things I wanted to do. Remember I spoke about the VIX, how important the volatility index is? Well, look at the VIX now. No, I don't want to do that. Let's go back there. Let's click on this one. There we go. Volatility index, VIX.X. And let me also just glance down at the page that I always write, and then I forget throughout the whole show to look down at this particular. Yes, I wrote down the other day. All those guys, Jack Smith, I think his name was Jack Smith, all those guys that were presidents, that were CEOs of General Motors, then they get onto CNBC, interviewed and and they've written books and everything. I'm saying to myself, with what's gone on in GM, we should recall all the books written by any CEO of General Motors. That's the way we should do it, for defects in thinking and defects in the accuracy of what they've said in those books, because believe me, they will not be talking about the problems. So I got that off my chest. That's good. I feel better already. So cotton diving. Cotton, I used to have it all notated. I wonder if I've still got the notation of the continuous contract. Yes, I do. So that was a B, and it was F/B, G/C. So it goes to a G, pulls back sharply. That's a G. That's the top. That gets a down arrow. That's the cotton continuous contract. Now, I know you don't like continuous contracts. Believe me, when I look at how much they've helped me over the years, I love them. So it's how you use them. I would never use them for trading. No. I just use them to give a general sense of historical data. But I see that there's a very big difference between the feeder cattle chart that I have as a continuous contract and the real one. So here's continuous contract. It did go to D. Continuous contract of cotton has gone to a D in the monthly chart. It says be a little bit careful when you get to a D. So just wonder if it was mentioned in the dead. Weekly chart is broken down from the dreaded H pattern and is pulling back. Question about VWO. I wonder if I've still got it notated. No, of course I don't have it notated. This has gone to a leg D. This is VWO, which is the Vanguard, some emerging markets, Vanguard FTSE emerging markets. So that's gone to a leg A, B, C, D, a leg D in the weekly chart. Still looking very good, very strong. I like it. If you don't mind, I'm just going, and the monthly chart is still looking good. Monthly chart looks like it wants to tackle the high of 43.16 in October of 2013, which will start leg C up. And the daily chart is going to A, B, C, D, E with a gap up to an F. It says, be careful, we could have a little bit of a pullback here, but let's just see the EM. I want to, the same chart. EM is an alternative count, G/C, and leg D in the weekly. Yep, they're in sync. So they're still looking very good, just on a very short-term basis. Might be a little bit toppy. Let's see, Saratoga Bob, I've got your 300 minutes the way I've notated it in leg F/B. I'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. the king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are back. And, okay, I just have to tell you this. I read it over again, and my eyes just popped right out. Look at this. I'm going to the front page of TFNN. Right here. 6-pack webinar bundle. Sign up now. 6-pack webinar bundle by Tom O'Brien, Basil Chapman, and Mike Comey. Memorial Day special this weekend only. This weekend only. Get 6 of our most popular webinar archives for the price of just 1. You get 11 hours of trading education. Register now for just $149. I can't believe it, 11 hours. Find me anything you can do for 11 hours at $149. Payment information exactly as it appears on your credit card. It tells you exactly what to do. It was so simple. You get the foundations of option trading, 2 hours of Tom O'Brien. Strategies of options trading, 2 hours of Tom O'Brien. Man, that's unbelievable. Moving averages, 2 hours, Basil Chapman. Stochastic and MACD, 1.5 hours, Basil Chapman. Those are really my 2 favorites webinars, those moving averages and those. Well, you can see how I use them all the time. Candlestick chart with Mike Comey. That was terrific. Advanced candlestick charting, 1.5 hours, Mike Comey. I tell you, what a treat. You'll get access. Hey, I thought it was just for the weekend when it was mentioned to me. I thought, that's fantastic. No. You'll get access to the 6 webinar archives, a total of 11 hours of education for 90 days. Plus, you'll get the course handout for each webinar, which is yours to keep. But you must act now. This offer is only good through Memorial Day, Monday, May the 26th. These courses sell for $149 a piece. So you're getting an $894 value for $149 when you purchase now. My cheeks are stretching. I'm grinning away. I can't believe that TFNN put this together. It is what a bargain. Amazing. All right. So let's get back to business here. So I wanted to do a couple of things. We're going to wrap up now. You're going to go to Larry President. Should be a wonderful show as always with Larry. What I'm looking at here is, let me just give you a summation of what I'm looking at in terms of each sector quickly. The Dow is only halfway back to the 16,735. It might fail, but my suspicion is that somehow, some way, as long as 16,420, somewhere in that area, I can't give you a specific figure, but I would say a close below 16,400 in the next 3 days would be very negative. That would be the H formation and say, hey, forget it. What are you thinking about going to all-time highs? But I think there's just enough evidence to say there's a possibility we could go to a slightly higher high. So the weekly next week goes to that D. It doesn't have to. I think it's going to do that. That's number one. Number two is, when I'm looking at the Qs, one of the reasons why yesterday morning, first thing, we jumped on the bandwagon for 300% long, the Qs, is that I love the action of this. Now, I talk about certain patterns, and I talk about them derisively sometimes, and one of them is the symmetric triangle or the asymmetric triangle. Why? Because very often it does what everybody talks about, that it breaks the resistance line and points to the way up. But if you look at enough charts, you'll find it breaks the line, and very often it goes just to the previous left side peak, not back to the starting point, in this case 2136, and then it stalls, and then it comes back because that apex is so powerful. I think this is something like that. So I'm suspecting that the Qs are going to rally. I think that they go to 91.36. I'm not sure, but they are very strong right now. And the MACD is at 87%. So I like what I'm seeing, even though it's leg D, and I've got to be a little careful in leg D. I like the fact that it's moving even today. Look how strong. It's up 50.56%. The Dow's only up 0.13. The S&P's only up 0.37. I focused on this. Why? Because I had said that I think that the lows that were made, and I might even include the IBB. Yeah, oh my God, look at the IBB. Up 6.15 at 235.89. God, that is amazing. So I'm thinking that this does have legs going into next week, and then we're going to see a test of what happens. So have a wonderful week. Oh, it's a Thursday. I'll be back with Tom O'Brien's off. Check that front page of TFNN. Sign up for that six-pack webinar.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.